We're snorting cap rates and shooting up cash flow here at Deal Junkies.
Welcome back to Deal Junkies. Isn't that how Gabe does it? I didn't like that either. We should. Nah, let's go with it. Today we're going to talk about the single family housing market as well as some of the commercial market. Mike said that we could talk about commercial stuff too.
You guys are so condescending.
You do commercial deals now.
Yeah, I don't know why you guys are condescending. I'm thinking about our audience.
Fair.
I'm thinking about our audience. I think there is a wider audience in the residential world than there is in the commercial world.
I think you're absolutely right. Trevor's the one who didn't want to talk about it. I don't really. Trevor and I live in an apartment and only own apartments. So there's like no.
I own houses.
Nope, you sold them. Oh, you own one house.
No, I own a couple others.
We own
but no, I just like doing this podcast to talk to you guys. Now we're just straying away and trying to focus on what the audience wants to hear, which who cares? This podcast is for us.
I like listening about the market though.
Okay. I always knew he was a selfish guy.
He never has tried to hide that one time.
That's true.
There's never been. What do you mean?
He's just genuinely nice. He's not nice to be manipulated.
He is honest all the time about what he wants to be doing.
Yes.
There's no.
Yes. Yeah, so I just wanted to finish my thought process about the single family market before Trevor cut me off because he got so bored because he wanted to hear about deals.
For the record, you guys can't see it, but the whole time Mike and I were talking about economics, Trevor probably yawned 14 times.
I think he fell asleep.
He just that's why I wasn't saying any words. He was yawning and sleeping. Anyways, Mike, finish your thought.
Yeah, so in the presentations I've given, I gave a CE class and I realized at the end it was a bunch of realtors in the room. And one thing I said was, if you're making your income in a transactional way, broker, realtor, mortgage broker, inspector, appraiser, then just expect another crappy year. If you're not buying real estate and creating equity, you're in the wrong side of the industry right now. And that's just an extension of what the past few years are. But the other thing I was talking about was sentiment and interest rates are not the same thing. And we really believe that interest rates drive sentiment, which makes sense because interest rates significantly lately affect purchasing power, and purchasing power is very important to sentiment. However, it's not the only component, and that's shown up over the past few years in 2023, 24, and again in 2025, although differently in 25, being that we always have pent-up demand that comes out of the winter. And historically, that shows up after the Super Bowl, after people have settled in, when the market got more exacerbated and inventory got less and less, that demand started getting released into the market faster. And so what you're having is the cyclical seasons. Really what that is just a change of sentiment. Part of that is weather related. Part of that is holidays related. Part of that is just the school season related, right? There's a lot of factors that play into that sentiment. But what we've seen, so my statement, Ryan mentioned it, was in a presentation in like September or October. You know, I said January and February will be the best time to sell a house, or the best, maybe most recent. And that didn't show up in January. And part of the reason was the easy assumption is, well, sentiment is increased. We saw more showing activity, lockbox activity increase, but offers weren't being made. And so, and that was also, step back a bit, supply levels bumped significantly for January's reporting. So you have this continuation of really sluggish demand in December that continued into January. But you talk to any broker in the residential world, and I guarantee you they feel differently this Friday than they did last Friday, even though we had a snowstorm, or maybe 2 Fridays ago or 3 Fridays ago. And so that sentiment shift has now that started in January, but not showing up in transaction volume in January, is now taking action in February. But what's happened during that period of time is interest rates have been stable to increasing. And so we're getting proof out of the marketplace right now that interest rates are a part of sentiment, but they're not everything when it comes to sentiment. And so that's where the analogy of a marketplace is like taking breath, right? Demand, you breathe in, pull it out of the market, you breathe out, you release it into the market. And that's why we see cyclical changes, and that's why we see prices go up and down. And we've seen these buying and selling windows open and close, like I've talked about. And I mentioned on the last episode is all the economic conversations I've had with people that know this stuff. I don't see anyone recently that has a really this is my opinion, and this is a really firm opinion. The only people that have a really firm opinion right now are the people that don't really know, that have a bias, and they just love to state their bias. Those are the most... Does that make sense? Where typically you can go to someone like Jay Scott and some of these other economists, and you can get a really good, hey, this is what's going to unfold, and it's unbiased, and based on this data, we can make assumptions that this is going to happen. But with the election and then inflation rearing its ugly head, and it's just this kind of unknown feeling. But what we do know is I do think sentiment's still going to be high. The problem is if interest rates don't go down, that breathing, that out breath of demand getting blown back into the market are going to be short spurts of air, and there isn't going to be anything that's actually going to sustain a good selling cycle. And I don't think that that's going to change anytime soon, because I just don't think
Isn't that the nature of equilibrium, though? Do you think that we're out of equilibrium right now, or do you think we're close to it?
I think we've been in equilibrium for a while as far as how markets flow, but it has not been a healthy market because volume is so slow, right? So if you take the slowdown in volume of real estate, and if you applied that to other industries...
The slowdown in volume of transactions?
Yes, transaction volume.
Okay.
So incomes are down because real estate is mostly a transactional income industry. If we had that atmosphere in real estate and all the other industries, then we'd be in a huge recession.
Oh, sure.
So we can't...
Yeah, sure.
That,
well, I think that
So even though we are equilibrium from a price standpoint, we're not a healthy market.
Well, you don't think transaction volume is where it should be?
Absolutely.
You think it's much lower than it should be?
Absolutely.
Okay.
Yeah.
I guess that was my main question, because I think part of it too is that we're coming from obviously the biggest boom of transactions ever.
Yeah, and that's not it. It's our transaction volume's down to the early 2000s level.
So why is transaction volume,
or even the 1990s?
Well, but I think again, I think a huge part of that is that everybody just did all the things that they wanted to do in a 2-year time span, and so it's like if you look at it from a 5-year scope, it's kind of like whatever. But if you look at it from the last 6 months, it's like, yeah, right now we are certainly not, I guess, transacting as much as we were.
So why is transaction volume down, though? Because with the single family space, people aren't selling homes because of rates.
So existing homes are down to the 1990s level, so 30-year low on existing home sales. The actual all totaled aggregate sales, I think, is more down to the mid-2000s. And the problem with that is because of the foundational cracks that creates in the marketplace. So the only way to increase transaction value, so this is the effect.
Transaction volume,
yeah, the amount of transactions. And this is the reflection of the mortgage lockdown. And it's a very nuanced conversation. I stopped listening to my favorite podcast because of the argument that the host and the economist have on this, which is, his take is there's no such thing as a mortgage lockdown, it will never happen, and her thing is, well, the reality is it happens. And it is people are not going to move up. We need first-time home buyers.
What's a mortgage lockdown?
Okay. I didn't want to get in this
briefly.
Trevor all time.
Briefly.
Which is, you just don't want to move because your mortgage rate's so low. Your payment is so low. And so if you're not moving up, then you don't create a place for someone to move in. And so much of our sales volume is based on sellers. So that's the economist argument, which is once interest rates come down, sellers will come to the market. What he is ignoring is once interest rates come down, we still don't have enough inventory, that prices are not going to come down. And so and interest rates with inflation are not going to come down enough to change that payment factor. And so people will be stuck in their mortgages longer, because if you want to get out of your $300,000 mortgage to get a $400,000 mortgage, that's not a slight increase in cost. It's a significant increase.
Probably
in
a
cost.
double right now.
And because values have been stagnant, you may not have the equity necessary to sell and make that change, even if you do have the income level. And so you have this lockdown position that I agree with the economist will dissipate over time, but it's not going to dissipate until you have a lot of deaths and a lot of divorces and a lot of moving for jobs. And because displacement, so this was something Ryan Gibson mentioned, is in the storage world, they don't have displacement right now. And you don't have displacement because you don't have transaction volume. And so transaction volume is a very important thing. And we're going into another year where we're going to have close to record low transaction
Why is
volume.
it a very important thing?
Because real estate creates so much part of our GDP. So on the overall global scenario, it's an important part to our overall economy. But when you look at the actual demographics of housing, builders aren't getting loans, builders are not creating inventory.
That's the only thing I would agree with. I don't think that transaction volume of existing homes matters as much as just new homes being built. Because it's an already existing asset. You're not creating value for the economy by trading an already existing asset.
So let's go to the vacancy rate conversation at the coast and compare that to the vacancy rate in Portland. So why do you like the vacancy rate at the coast?
It's low.
And great. So it's low.
Yeah.
What does that do?
That means that rents are higher. Nobody else has a place
Prices
to go.
are higher. Rents are higher.
Sure.
So if you don't have movement in the existing world, you have a lower vacancy rate.
Yeah.
And the problem is you're not going to incentivize builders enough to offset that by creating enough supply in most locations.
What? Say like
That didn't click. So we have low
If existing homeowners are not moving, and existing homeowners are not creating space for people to move into, your only option is new construction to move into.
Yes, I agree. And everything in Salem, we're still building a ton of houses in Salem. There's huge subdivisions going out off of Cordon Road, State Street, and then over in West Salem, all the same.
How many people can afford a new home?
Well, so that's the thing, is it just changed what they're building. I mean, the houses they're building are super affordable. Like they're building $350,000, $400,000 homes. There's a 5-bedroom for $450,000, 5-bed, 3-bath. Like that's super. If you got 4 kids, 5 kids, and you're buying a $450,000 new construction home, you're pretty happy.
And
you're a happy guy.
And that isn't a reflection of the existing home market. If the existing home market had more transaction volume, that price would be even lower.
So why is that bad though? Isn't that good? Because that incentivizes the builders to build more homes. They don't want the
lowering price does not incentivize builders.
No. I know. That's why I'm saying. So low transaction volume means that builders are going to build more homes because they can sell it for more.
If they have faith in the market and if they have faith in financing. And so if you look at when they made the decision to produce that housing.
5 years ago.
Right.
Sure.
So are they making that same decision now to produce another 350 units?
I think right now they are, yeah.
I think that
last year they weren't. Last year they weren't.
The other statement I had is builder sentiment is split.
Yeah, I'll give you that.
So
I don't
the
think
bigger capitalized, the bigger developers, they're not as concerned. They look on 10 and 30-year timelines and they have the capital to produce.
It's D.R. Horton who's building that.
But how many of those builders are in the valley?
Yeah.
How many does that...
Yeah, no, Salem's fine, but I see what you're saying with like nobody's building a house in Staten right now.
So you go to now like Portland. Well, Portland doesn't have subdivision land. Portland only has infill housing. And so you go to the split in sentiment. There's only one builder that is aggressive now on buying land. The guy who has a shit ton of vacant units because his capital stack is a mystery that no one can figure out of where it comes from.
Is this a person that you know that you're not naming, or is this...
No, it's not...
Is just
it's not bank loans.
Yeah.
It's more like mafia
New
money.
York. Yeah.
Like, yeah.
The two guys I'm thinking of have funding out of New York and Chicago.
Other global areas where it's getting parked into new construction and then just sitting vacant. So the smaller developers, the reason we can create build to rent models is because there's not smaller developers who we are competing with us to go buy land. And that's the only type of inventory that can get created in Portland. And so if you don't have those builders buying that type of land and creating that inventory, so right now we have a glut of inventory of new construction on the market because it's the same product type. Here's the other point.
I think
like
Portland's different than the rest of the country.
This is the other point that I love right now is and I mentioned I think on the last where it's localized, right?
Yeah,
it's gone back to localized,
you did.
and so you're coming from a different.
Portland's way different.
You're in a different marketplace.
Yeah.
But the reality is we do need existing home sales because we need income to realtors. That creates taxes, that creates volume, it creates moving. The amount of income that people moving in the existing world that flows through the economy, especially when real estate is localized, is significant.
As a realtor, as a member of the NAR, myself, not proud of that. Wish I didn't have to join it. It's a monopoly, but whatever. Don't sue me. I don't know that I think that income to real. I think there were way too many.
I'm not saying income to realtors.
22.
Who gets paid in one existing home sale? Who gets paid?
It's like 25 people.
Yes,
yeah,
that's what matters. I don't care about the realtors.
Sure.
The worst, stupidest stat that realtors are throwing in fucking January and February is 74% of realtors didn't sell a home. Yeah, that's the same stat as the year prior and fucking all 10 years prior.
Yeah,
nothing changed to the allocation of percentage of who's selling what. But the total volume, the total people getting paid is down significantly. Yeah. And that matters to our marketplace. Yeah, if I wanted to make an argument and say that is helpful.
I just don't think it's productive though.
You don't think people making
real estate no. I'm
productive?
saying it's like it's the broken window fallacy though. It's like, hey, during wartime, our GDP skyrockets. The economy gets super strong. Would it have been better if we didn't go to war? Yeah, it would have. And it's like, okay, and if you have a tribe of 100 people and somebody goes out and breaks 10 windows and then like cracks the foundation of one of the buildings, all of a sudden there's all this GDP because somebody had to go fix those windows and fix the foundation. And it's like money's moving around. I don't think that means that that's better though. You don't have more than you did before. Yes, money moved around. Yes, somebody made income. Yes, somebody paid taxes. But if you're looking at it from like the high level perspective, it's not better that those windows were broken. Like, I don't think that it's better that the existing houses were transacting. I don't think that because there's not a new house. We want new houses. I think that in the scenario where it's like, hey, the market's super tight, nothing's transacting. The only thing that makes sense right now.
Here's why it matters.
Is new subdivisions.
What's your typical down payment?
On a home, 5%.
Okay, so $300,000 home, so 15 grand.
Yeah.
There's more than 15 grand that's made from income in that transaction. If you look at all the people getting paid in escrow, brokers, appraisers, inspectors, lenders.
Yeah.
So that $15,000 down payment puts more than 15 grand into our local economy.
Yeah.
That's why it matters. So only way to support your argument is if you're really concerned about inflation and you want less spending in our economy. Right? So the realtors are getting paid 5%, but there's only a 5% down payment. Title's getting paid, inspectors getting paid, appraisers getting paid. So that one sale puts more money into our economy based on the leverage that's created in that transaction.
Yeah, I am concerned about inflation then. Because I don't think, again, I still don't think it's valuable. I think that that's the problem during COVID is everybody was like, well, I can become a realtor.
Yeah, so what we're getting down to is the prices of homes.
The prices of homes, yeah.
Yeah. We need the volume to keep the prices down if we want to increase transaction volume.
Why do we need the volume to keep prices down?
We need listings. We need inventory. We need options.
So inventory is still low, you think?
We need competition to bring prices down. Which we've done. We've done a good, but the majority of inventory was created early in 2022. It wasn't created as much in it was early 2022 and 2023.
New construction?
Just inventory in general.
Inventory on the market.
Homes listings available to purchase at the end of the month.
Yeah.
And then it was increased a little bit again this past winter because sales was so down. But the inventory hasn't been created because of new listings. Inventory has been created mostly because of lack of demand. And that's what I'm trying to get at is we don't have an environment the builders are just going to build because it's a commodity driven market. They need to make profit and we're tapped out. So builders are.
But if prices are going up, why are they not going to build? That's what doesn't make sense to me.
Prices aren't going up because interest
If prices
rates are not
aren't going
down.
down, is what you said. We need more transactions for prices to go down.
So here's how the median sales price works, right? So you can look at the median sales price and we can say, hey, it's been flat to slightly increasing because it's full of a bunch of existing homes that are dragging up the new construction. You can separate new construction from that, and you can see reports that show that the median sales price for new construction is increasing. But what median sales price does not show is the net sheet that these builders have.
Yeah, totally.
I guarantee you
It's lower. Yeah, it's worse.
Median prices are declining in new construction. Builders are not excited to go put inventory into the market because of the shitty market conditions we have because demand is down. Now, that's a different discussion than the existing home sales. I understand that. But we need the existing home sales to create income so people buy more houses, so builders feel good to build more houses. We need the C to rise.
Okay, see, that's where again so I agree that we need income. What I disagree with is that we need income from transactions of homes, because I think that all the realtors who I know who are no longer realtors because the market has slowed down so much, they are not unemployed. They went and got a job that was productive. And I am a realtor, and I don't think it's the most productive job on the planet. I think that there is a lot of value for people who are really good at it. A lot of value created by the people who are really good at it, because instead of reducing the number of transactions, they're increasing it by making deals happen, right? Like Gabe is an example of a great broker. Gabe brokers a lot of deals because Gabe gets deals
but you're
done.
focusing on one component of the
No, what I'm saying is that the people who are no longer just because transaction volume decreases doesn't mean that those people don't make money anymore. It means that they go do something else productive, because jobs aren't down, jobs are up. There's more people doing things that are productive. That's better than just trading in houses because that's why it was inflationary during 2022, because there were so many transactions and there wasn't value being created behind those transactions. There was just so much money being moved. That's what caused the inflation. And so then when it's like, hey, we actually need to normalize again, transactions need to go down. We need to have fewer realtors, fewer people involved in real estate. Then all those people didn't just get unemployed. They went and got another job, and they're producing something. It's one of the guys that was a lender of ours.
How many realtors do you know buy houses?
What do you mean?
You're just talking about income that doesn't go into houses. So I understand what you're saying is just a different allocation of money in the economy. But what I'm saying is, so this is a good example of macroeconomics and microeconomics. You're looking at macroeconomics as the economy as a whole. I'm looking at the industry from a micro level. It is not functioning right now for long-term health. You can look at a lot of graphs and say, hey, it's a normal market. Mm-hmm. Our market's going to fall apart in 5 years if we don't fix it.
Because there won't be enough inventory.
Exactly.
See, I think all that'll correct. That's what I'm arguing. I'm saying that I think all the people who are no longer realtors are going to go do something else. And then the person who was doing that, I'm not saying the realtors are going to be the ones that are framing houses, but somebody's going to go start building houses. And as the need for those things goes up, labor is getting cheaper. Laborers need jobs right now, right? Everybody that's in the construction industry is looking for work. Like subs are calling back GCs quick right now because they need work.
Problem.
And so that's the prices going down, though. That's the market correcting. That's better. I don't think that it was correct before, is what I'm arguing. I think that's what caused the inflation.
It's the duration is the conversation. So early on in COVID, one of the big conversations that Jerome had was the duration of the employment, being unemployed.
Yeah.
That is what's problematic. I
agree with that.
If you're looking at
we're not arguing there.
Yeah. If this goes another 18 months, and this is what we saw, the reason we had very good permitting activity during the mid 2000s, and then permitting fell off a cliff. Mm-hmm. We've had a construction boom post 2014, but it had not come back. Construction booms now are not what construction booms ever will have been, and they never will be the same, because lending in construction is significantly different post the recession. Mm-hmm. Lenders are not going to overfund builders. They are a mechanism of safety into the marketplace right now. So it's not going to change overnight. And what we saw was we were still trying to recover construction jobs from the housing crash, because once those people leave, how do you pull them back in? They had skills. They went and got other skills. They got a different job.
Yeah.
So the longer that this lasts, the bigger down road problems that it creates. Now, I'm not concerned. I'm not saying this is a huge scenario.
Yeah.
But I mean, for this year, transaction volume is going to be low.
Yeah.
That's all I was trying to get at. And so if you make money transactionally, you're probably not going to have a great income year.
I think Trevor and I will.
Dude, you guys had a good income year compared to, like, you can't.
Yeah. No, I know. I'm kidding.
like, that's a
No, I agree with you. I don't think most people are. Yeah.
He just loves to switch the microscope on me. When I'm going micro, he wants to go macro. When I go macro, he wants to go micro.
I do agree with you. I don't think that. I mean, it hasn't been good since the halfway through.
But we could get in a scenario where the existing home sales decline extends out while new construction increases, and it's quite possible.
I think it will.
Yeah,
that's what I think will happen.
And I agree with you that the longer that a lockdown scenario occurs, the more upward pressure that puts on prices for sure, because it reduces inventory.
Yeah.
And so what you can look at, well, what are the natural dissipating events of a mortgage lockdown? One is value growth to create more equity, so that the equity has more value than your lower mortgage payment. Divorce and death, it'll dissipate out. And I think that what I'm saying is that equity increase to offset the increase in payment, it could be a while before that makes sense.
Oh, totally. It should be.
Yeah.
I don't think it should happen soon.
The bigger concern is, if we don't build more rental housing, specifically in the single family world, is how many people just don't sell their house and they save up and they buy one and then rent their house. And how does that exacerbate the existing home sales market?
I don't think people that are not investors want to own rentals.
I think the average investor starts by renting out the home they once lived in.
Yeah, but I think majority of people don't even consider that as an option, and then they start to try to go down that road, and then they shit their pants.
I think the rate of people making the decision to go down that road has increased significantly over the past 5 years.
Well, with a 2.7% rate, I think it does. Yeah.
And so it's just education. It's just a different.
Yeah.
Yeah.
But it's still they're not making most of their money through that cash flow anyway. But
no, they're just trying to pay down their mortgage.
Mm-hmm.
Yeah.
And they don't need their equity, and they don't realize how.
Most people see that equity, though, and can't,
just get so excited.
Most people prefer equity than liquidity.
Yes. No.
No. I 100% disagree with that. I 100% think people prefer equity because of the safety that creates than cash in the bank.
No.
Yep, absolutely.
No shot.
I think if you were to actually
I don't
get
think
into
there's
the
any way to
psychology
prove this, but I
think
disagree.
Subconsciously, I'm right. I think you can point to a lot of actions that say that I'm not, but I think subconsciously people would rather have a house with $500,000 of equity in it than $500,000 of cash because they don't trust themselves with the cash.
Nope. Don't know any of those people.
Yeah, but look who you run. You're a different mindset person.
Yeah, the people we would hang out with would take the equity in a property.
Right.
The average person is taking $500,000 in cash. Dude,
I think
people throw. Dude, do you know how many people could have a rental and just throw this house away when they could just go rent it out and buy another one?
Well, I guess
a very good friend of mine who is a financial advisor had a home with a 2.65% rate that I lived in with him. And when we moved to a different house that they bought, he had 100-something thousand in equity. And I had to yell at him to not sell that thing and keep the interest rate that he had on it. And if he wanted to, pull a HELOC prior to moving. But and he is very, very good with money. He tells other people what to do with their money, and even he was like, "I want the money.
I want
right
the
now. I'd love to just
$100,000 looked like
it'd be so
money.
fun to have $100,000.
Yeah,
right
but
now.
that is not the average thinker. He's good with money, and he knows he can be used with useful with that money. And
he just wanted $100,000 because it was a big.
No, yeah, he just wanted to pull $100K out.
I don't think most people are like that. I think in the qualifying process to that thought process is how do people create that equity? They live in their house over a period of time. They want to use that equity to put it in the next house. There is safety in equity. That's why Dave Ramsey says pay off your mortgage. I think our subconscious.
The majority of people are like the people who follow Dave Ramsey, though. I do not think most people are like that.
No, I think subconsciously people prefer the safety.
The marshmallow
of equity.
test, Mike. If you could have $50,000 right now, or you could have $500,000 in 10 years. People are taking that.
No, you're giving a new option. You are giving a new. What you're missing is if you're sitting in a house with equity, Would you rather have access to that equity so you have cash,
For sure.
or would you rather have the safety that equity provides?
That's what a HELOC is.
Why do people get out fucking HELOCs? Is to pay off debts because they're bad with.
Start swearing.
It's bad with personal finance. The majority of people that pull HELOCs are not because they're going to go invest that. It's because they're paying down, they're refinancing to pay off credit card debt to get their.
or buying a boat.
I totally agree. They just want the money.
Yeah, I guess you're right. I'm arguing against myself.
Yeah, that's what. You,
No, I think no.
Dan and Trevor
so,
won,
but
Mike
so you're
0.
no. They want access to the money.
yeah.
They don't want the cash. But most people, I don't think, realize how they eat the equity.
But
Oh, I'm probably wrong.
yeah, they are, but they're eating it. That's what I'm getting at. Because they
Yeah, subconsciously,
they want the money.
they're subconsciously doing that.
They take it out and then they spend it on stupid stuff because they have it now. Yeah, I agree that they're not smart with it, and they should most people should probably just leave it in the house. I just don't think they do that. I think they see all the money and they're like, "Give me that. I want that money out." I think that's what.
No one can delay gratification.
No,
They
they're
want
terrible
money
at
now.
it. And there is something to be said though about not delaying it too far.
Oh, you can do that.
I think you can do that.
Yeah.
I think you can do that. I think there's a lot of investors that have done that.
We saw one.
A lot of guys that we've
saw
met
one guy
with.
with 120 million of real estate, and he was you saw him too. Here's my 5 cars worth $3,000 total,
yeah.
even though I have millions of dollars here.
That was wild.
And then here's my tenant I hear above my house with my wife stomping on our ceiling. It's a little annoying,
Yeah,
but
but
I
that's
save $300 a month. But I have millions
That's
of dollars.
wild.
That's a generational mindset for the
Yeah.
most part. There was a guy at Lakers event that lost $900,000. Nate, who was doing the MC, he asked the question, "Who lost the most amount of money?" And someone's like, 16 grand or 27 grand. I was like, well, I could beat that. I don't know.
Yeah.
And then one guy raised his hand. He's like, 900, and Nate's like, $900. The guy's like, 900,000.
How'd he lose it?
He bought a multifamily in the top of COVID that he wanted a condo convert, and the note matured.
Oh,
So his options were
He
bring
did short-term debt on it.
his options were bring 1.2 million to refi or sell for a $900,000.
And he bought a
loss.
bad deal because his whole plan was to condo convert, so it wasn't something.
It was fully based on value creation.
Was he a wealthy guy? Could he afford that 900 grand?
I
Apparently,
don't
he's
know.
still playing
I
if
mean,
he's at a meetup.
Yeah, he's at a meetup. I don't know.
And he's willing to share it. So
Well, he's a wholesaler now, but
Oh, really?
no,
knocked him back to the bottom, huh?
just a bad
Just
joke.
punched him back to the bottom of the rung. Wow.
Dude,
that was
Seattle's
fun.
not. I like Seattle.
I enjoy
I
Seattle.
like the neighborhoods.
I do not like the winter in Seattle at all.
No, the weather sucks in Seattle. It's worse than Portland. But the lakes,
The city
the
itself,
neighborhoods
though, yeah.
are better built out.
Okay, so
Really?
from your guys' whole discussion there, what's the takeaway? What action steps do people
I don't know. We just
take?
got into an argument.
I thought it was
Okay.
fun. I had a lot of fun.
Okay.
Yeah.
I think I don't know. We kind of talked about how. Yeah. So what deals are you working on?
Yeah, Trevor, what have you been up to lately?
My phone's over there recording, so can you look at our sheet of what we're doing?
Oh, yeah.
What's the 57 units? What's going on there?
We're trying
that's
to
been a
overpay
long...
for a seller carry piece of junk that it's worth $6 million. He wants $8 million. So we just gave him
Does it need value add? Is it going to bleed and suck and money pitch you to death?
Yeah.
And you want that?
No, Dane does though.
What?
No, I think we're just
What?
looking at it in
Which
terms-
one?
It's like, okay, we'll pay you 6, we'll pay you 5% on it. Okay, if we pay you 8, we have to pay you 2% rate. Like,
Yep.
you choose.
Why did it? Oh, I
I
took
don't-
my phone out to look at the deal sheet, and then I totally.
Yeah.
We got another deal.
And you got it on
Divided
social
it.
media?
No, I was
You
on.
got
I was.
some DMs?
I got some. Gabe actually texted me about an offer for a property that we have to write.
Well, so that's a great. So why would you
So-
pay $2 million more?
Actually,
Wait.
I want to talk to you about a deal that actually matters. Screw that deal. So here's
Oh, that's a great conversation.
No,
Why would
it
you
will
pay
be. This
$2
is the
million
same
more?
conversation.
Wait.
But on a real deal that's going under contract.
oh,
Do you need to say something?
which deal were you talking about just a second ago?
57 unit.
Oh, that thing. Whatever. Yeah, talk about this thing.
Okay, so
Oh, this is a good one.
this is interesting because this is a debate Dane and Gabe have. Gabe is like looking at the price per square foot.
Oh, Mike's on my
He
team.
says, we don't care about price per square foot. Dane is looking at this thing and it's $500 a square foot for this building.
Guess how new the construction is?
Not.
It's not new.
Prime location, I'm
It
told.
is a good location.
But it's a mixed use building. It's like they want like 3.2. We're doing it for like 2.6 or 2.8, 10% down. It's a 4 cap 3.5 cap or something. We're starting with a 3% IO rate and elevating it over time. So it gets about, I think I might have underwrote a little conservative, but like a 9% cash on cash. Which,
at closing.
Yeah, at closing, which with a little bit of upside in rent
With the
still
3% interest rate.
With the 3. So yeah, it's just a really expensive price per square foot, but you get to buy it for not that much money, and you can hit a okay, that's a good cash on cash return, but not that great because it's an IO loan too, right? And really good debt. So it's not that great outside of that. But the building itself, Gabe is like, yeah, this is
it's a prime location.
It's a prime location.
It's very good.
Great building. Like,
you would love it.
to own
You're a
this
location
building.
guy. You'd love it. It's in Portland.
It's romantic.
Yeah.
Yeah.
Yeah. It's got a good little.
It's just mixed use.
Yeah, it's got a good little cafe in it
and stuff like that.
Yeah.
So what do you think of a deal like that where it's $500 a square foot, right?
It's like $540 a square
It's
foot.
like I don't think it's that much, but yeah, 508 I think it was.
Oh.
But,
yeah, I got lots of thoughts.
Yeah, tell us your thoughts.
I mean, well, again, it just comes down to, so what's your investment philosophy?
What's the balloon on it too? Sorry, before we get into this.
I think that matters.
10
because
years.
that's huge.
Everyone has a different philosophy. Everyone has different resources. And what's your goal? What are you trying to do?
So the philosophy is you can buy real estate with not that much money over a long time horizon, and it will cash flow and pay a decent return on the money you do have into it.
Yeah, so you got a decent return to place capital in probably a safe investment because of the terms you negotiated over a long period of time.
Yeah.
But in order to do that, you have to be in a position to store capital, right? And so if you're not in a position to store capital, then that's not a good deal for you. But where you guys are at is you're balance sheet driven. You do have capital. You're looking to place capital, get a return on that capital, and expand your value of your balance sheet over time. So this can accomplish that because you're controlling a lot of real estate for a little bit of money.
Yeah, the fear you have with a building like this is now you get stuck in it, and if we're overpaying by that much, because I don't know this asset type, like, is it worth that much? I don't know. I don't buy this asset type.
And so that's where your time horizons matter.
And you get screwed because if we're like, hey, we want to exit this deal in 3 years, but we overpaid for it by $600,000, we can't.
So going really quickly back to the 6 million at 5% versus 8 million at 3%.
Yeah.
So you're just using cheaper interest to juice your returns. But in that case, you're not, the 2% isn't significant. So you need a note for like 20 years to make that make sense. And so if you're not banking on any appreciation or any increase in
I
income
am banking on appreciation. Not even like
in the long term,
but I'm saying forced appreciation. I think there is a play to force
to
appreciation.
increase the income.
Yeah.
On the 50-something unit?
Yeah, for sure.
On that one. But going back to Portland, right? So going back to Portland, or even, so that one does have the ability to increase.
That deal that I was talking about is in Portland too. Okay. It's in a very good area.
You told me it wasn't in Portland.
Well, no, there's another deal. There's two deals. I didn't think he was talking about that deal.
Are you guys fighting over the same deal as me?
No. Not as far as we know.
I thought we clarified this in the last episode, and then you just made me think that you were...
I was talking about a different deal.
Okay.
No.
There is another deal.
I bet this is the same deal. I bet this is the same deal. Is your building a brick building?
No, I'm not in a mixed use deal. I'm talking about the 57.
Yeah.
Yeah.
The 50.
Is it a bricker?
No, it's not a bricker.
Oh, nice. Okay.
Yeah, I don't work with Ben. Is it a Ben Murphy deal?
No.
No, he doesn't work with us either.
Oh.
Yeah, Ben doesn't. Ben likes us. Ben likes me. Ben didn't take Trevor's offer though.
I know he has some brickers, seller finance brickers available.
Oh, really?
Oh,
He did. I mean, that's the only time I get a phone
Dane,
call.
you should call him.
Every time I get a phone call with Ben is like, hey, here's a bricker that no one wants, seller financing at a 4 cap. And I don't return his call.
You were acquisitions.
Yeah, but he didn't like our last offers on our...
Yeah.
That's,
Okay, so going back to, like, why would you do that? So if you've got 200 grand of capital to place and you get a 9% return and that fits what you want to do, as long as you get the right time frame, then you're okay. Now, if it's a mixed use building and you don't have the ability to force appreciate it, I want a longer time frame, especially if it's in Portland, depending on where the location is. Does that make sense? So like, if you're buying it at market rate now and you're on Division Street, well, you're a victim to the market. if you're paying market rate now in your 42nd Avenue, it's probably going to just have some natural upside because it's on the cusp of high demand areas. Does that make sense? And so markets now, because we're localized, and I do believe we've gone back to a localized markets, and that will be the case going forward. I don't think we'll ever go back to non-localized markets. Now you can be creative of getting not in a tertiary market, but right next door to a real high demand market. So 42nd Avenue is an example of that because it's by Alberta and Beaumont. Does that make sense? So, but if you're buying a mixed use building that is a small building that's like 5 units and owner occupied, I'm never banking appreciation on that asset class because I don't like the demand from that asset class. So if you're only surviving on an IO scenario for 10 years and you can't increase rents, I'm not really excited about that.
Yeah.
If you can make it 20 years, that's a different scenario.
Sure. I if we could throw extensions in, but I'm in the same boat where it's like if we were paying down principal, if like we weren't putting any of
You
our
could
own
do a
money in at
1%
all,
amortize instead of 3% IO.
Yeah.
Different scenario.
sure,
Yeah.
because then you know it's like 10 years from now you've paid down 20% of the loan at least.
Yeah.
So you're you can at least you can sell and break, even if you sell it at break even. You can pull some.
I say a lot that I don't like amortizing debt, but I like having amortizing debt in my
1%.
balance sheet.
Well, yeah, have it. Yeah.
Like,
Maybe we'll go principal only on this one.
Well, that's the thing.
there
though,
you go.
is if you
or for a period of time, do principal only.
yeah. No payment. Yeah. I mean, there's a number of the main reason that I don't like it is what he's saying though, is I just don't have there's nothing that we can do to go in and be like, oh, now we can make it worth $1,000 a square foot.
Yeah.
Because that's just not what stuff sells for in Portland. Like there's obviously,
And brickers themselves, like it may be a lot to rebuild it, but
I don't think that one's a bricker, is
That
it?
one's not.
okay.
Yeah, that was that was the
Unreinforced
other.
masonry is definitely something you want to be concerned
We're
about.
looking at, that's one of the projects we're looking at, and that one's not as appealing to me.
What else are we looking at right now?
Well, the other deal that I was talking about earlier is a deal down in Salem, and it's a 57 unit though. It's been on the market for a long time. Everybody probably knows what it is, but we wrote a good offer on it. I felt like
You think you're going to get traction on it?
No.
no, I think we will certainly.
Oh, yes.
Yeah.
Sorry.
Oh, you guys make offers that you don't think are going to get accepted?
Well, the seller's just not ready to accept what their building is worth on a lot of these. It's not
Yeah.
planted in
Yeah.
the seed.
they also have like pretty good debt for the next 2 years, so I think he's just going to slow roll it. But we sent an offer that I actually thought was very strong, and I wrote out the budget and I told him exactly how much money we were going to make on it, because it's like, hey, you know that we have to come in and do all this work. Here's how much money we're going to make on it. Why would we do it for any less than this amount? The amount of risk that we're taking on a project this size, like, does that make sense? You know?
Yeah, you're valuing your opportunity.
Yeah, and they were just like, I mean, they either get to look at it and be like, okay, your numbers are wrong, or you don't deserve to make money, or we'll take the price.
Yep.
And
yeah, a lot of these brokers don't think like who is the taker for this product and how do they succeed within the deal.
I think the broker on that deal is, because I've talked to him for a while about it, and he's trying to push it to get them to come to reality.
But I think I agree with what Trevor's saying,
Yeah.
and you can quickly recognize when someone does.
Yeah.
And I think
yeah.
we need to do a better job too of telling like this is how much money we will make and why we need to buy it at this price.
Oh,
so like
totally.
they understand rather than just they feel like we're lowballing
Yeah.
them because they don't understand how
Dude, I
money is
love
made.
the real life anecdotal evidence to defend what you're saying. I had a broker that reaches out, works in a different part of town. It's a specific property type, not in a great part of town. We're the only people that look at it. I was like, hey, this part of town sucks. No one's buying these types of properties, even if they are in a good part of town. Here's the only way to sell it. We can definitely do this. If they're trying to move, we can get them a big down payment. They can go buy another house. She responds back, nope, they're not into seller financing. I work with all these builders and they're the best builders in town. I'm like, yeah, you just told me that you don't understand the taker for that property.
what you're doing, yeah,
Because those builders
are not building anything.
the houses
right?
they sell are more than the entire value. Like it's just so. I agree that brokers don't understand who the end buyer is, and that will affect how they function in the marketplace.
Yeah, and I went to that thing in Florida, exchange counselor thing, and that was the big thing they're hammering everyone on when they would bring a deal up here. It'd be a shit deal.
Mm-hmm.
They would hammer you on who is the taker for this. Why would someone buy this? And no broker is thinking, because in the residential space, it doesn't matter. It's all emotion.
Yeah.
So like once you get into the commercial space of trading these assets, they're not thinking who is the taker. Like who would benefit from owning this property.
Mm-hmm.
They're just like 1030. All they're thinking of is like this one person who's stuck in a 1031 exchange and just has to buy something.
Yeah.
Like that's the taker for every one of these.
Hey everybody, I've got this deal that needs a 1031 at the end of their exchange. It's got $1 million tax hit coming. Anybody out there in that position?
Yeah.
But yeah, so I think people are coming to the realization, but I think Dane's been writing some good like explanations that I've seen of like, this is why we would actually buy it. Here's how we're going to benefit.
It was weird because used to it's like we wanted to be like, we almost wanted to hide it when we were giving a conventional offer. Like just hey, here's what we would pay lowest number, as though it would like incentivize the seller carry. But now it's just like, why would we not share that, especially on bigger projects, I guess is what I would say. Because most of the people who own something that's 40 units plus are going to be able to look at whatever budget we lay out, whatever, income we think we can get it to. And I literally, I was like, when I sent that offer, I was like, I genuinely love this project. We want to do it. Like, it's heavy value add. It's right up our alley. We're the people who would do this project. There's like maybe one that comes to mind, maybe another group that would do it. And like, if they're not offering, and if they do offer, it's probably going to be lower than this. Mm-hmm. Like, I'm telling you, we're going to pay the highest price that anybody who's going to successfully do this project would pay. And that's
especially
like, that means a lot to a seller.
Especially if it's already been exposed to the market.
Yeah.
Can you leave the seller in on that deal? Because
that's what I think we'll end up doing.
Yeah.
So I was actually gonna mention that, is that my initial conversation with them was, hey, here's one way that we could structure it where we left you in as a partner on the project and we just went and did the project. Here's the other projects that we've done. Here's the structure that we would propose. And then it just like was hard to kind of get it rolling. And so we came back just with a strict offer of like, hey, here's what it has to be if we're just going to cash you out. And so if that's not appealing and you want to hit this number, you want to net this number, then can you net that in like 3 years?
Yep.
Are you cool if we pay you that 3 years from now? Because you have a 2-year note on it anyways. You might as well just let us come in and do it. And then if you don't care, you just want your number, then let us do the work and you can have the money and then we get the rest of the upside.
And guess what? The longer you keep it on the market and don't do the work, the more important that maturity becomes.
Yeah.
Yeah, it's interesting too because we offered on like a 20 unit and they wanted like 4.2 for it, and they were like seller financing available. So we're like, okay, it's like a 3.9 cap or something. We made what we felt like was actually a pretty good offer. It's $175 a door. It's worth $125 a door. We offered $175 a door, 10% down, and we bought it on a cash flow basis of like, we will buy this income stream from this project with a long enough time horizon. We are okay with that. And then they're like, oh, we actually want $2 million down on this seller carry.
Yeah.
And then
Your property's worth $2 million. You just want the whole price down and then you want a free note on top.
And then it's like, okay, well, we'll buy it conventionally, but it's going to be at $3 million or whatever.
I think I said like 2. Yeah.
And then they're like, well, why can't you just pay the other price this way? And we're like, because
I thought you were okay paying that price.
Money.
Yeah, that's an example of a not very sophisticated.
Yeah, but let's be honest, most sellers don't care if you can make money or not.
Yeah, they're not. It's not their concern.
Well, most sellers don't care if you can make money if somebody else is dumb enough to do the project. But once it's been on the market for a year, or you've been trying to sell it for 3 years,
seasoning, the ripening
it's like,
period.
Oh, now I care if you can make money because that's the only way I get to make money.
And some of them just aren't motivated sellers, right?
Yeah,
they just want that price, and they'll get that price, but maybe not for 3 years.
Mm-hmm.
Yeah.
Like their rent roll will increase, it'll improve, their units will turn, and they'll have to do stuff, and then it will be worth it.
And that makes sense when you have a performing asset. What's weird is that you find those sellers in the off-market world where it's a shithole and it is vacant and there's no income and it is getting worse. And as it gets worse, they want more. Yeah. And every conversation, their price went up.
Because when you own one single asset like that and you're not a sophisticated person, that's a big payday.
Yeah.
Like $100,000 difference, a $500,000 difference. That's life-changing generational money for a lot of those people that just got past this asset.
Yeah. What did I just say? People prefer the equity than the cash.
No, they want the cash out when they sell it.
Nope.
Yes, that's exactly what he was just saying.
The guy I just spoke with is the guy who prefers the equity than the cash.
Dude, you already told us
the magical equity.
We're not
because equity is perceived.
Mike, no.
Yep, it's perceived. So people want that, and they don't want to.
Yeah, sure. Everyone wants more money. Yeah, I agree.
I don't care that you're pushing it again. I care that Trevor said the exact opposite of what you're now saying. And then you said, yep, see? But that's not what he was saying.
No, that's exactly what he said.
No, he was saying they want to sell at the highest price because that money is huge to them once it's in their
So, like,
pocket.
think about this: like a normal home
But
sale gets so stuck on price because $10,000, $20,000 to the average person is a shit.
Yeah, we're talking to different avatars. The guy that I said and then you extended is the person that they just never sell. I've seen these sellers come and go,
sure.
and then they ultimately give up 10 years down the road and sell it for song because an event happened.
Yeah.
But that period of time when they have their faculties and they have liquidity, free and clear assets, millions of dollars, they can
That's not the average
they can liquidate it overnight, change their entire life overnight. They choose not to until they're on their deathbed.
That's a person with like a lot of assets, and then there's a lot of these people that have one asset, maybe two. Like a lot of these apartments I feel like they're owned by just random, passed down through the family.
Yeah. I mean, the exact deal we're talking about, that's the case. And they just have like two kind of weird properties and they make good cash flow on it. And so they're in the position where it's like, I make great money every month. Like, I don't need to sell it. And if I do, I think their attorney is the one who told them what it was worth. And we like made a full breakdown on why it was worth what it was worth.
2 years.
Yeah.
So we could have bought it 2 years. And this lady was like, I don't want this. I self-manage it. It's hell.
Is she
I want to
still
get rid of it.
self-managing it?
Yeah.
And they have not sold it.
And they
stuck on the
do
attorney.
not look good in the inside.
I think the biggest problem in real estate is people trying to wear hats that they don't fucking have any business wearing.
Yeah. I would. Well, that's actually what gives us that's where we create our gain.
Because you're wearing a fiduciary, a financial advisor hat, and you should be wearing one.
No, because that's when you get to buy the deals, right? Is when you find the property where somebody wore all 17 hats.
No, I mean attorneys wearing the broker hat.
Oh yeah, totally.
Yeah.
I find it interesting when you have these brokers who invest in syndications and like no assets, but then they're selling these things at prices that don't make sense. Like they would never invest in them themselves, but they're trying to sell it to you like it's a good investment. And I'm like, oh, you want to pitch your fee into this deal?
That's why I'm not a broker.
No, I'm not this one. The next one, I got you.
I barely have enough deals to buy myself. If I were a broker, I would never sell any deals.
What happened to that? You were going to get your broker's license.
Oh, I might still actually. I'm supposed to do that actually. I need to renew my property management license too.
I'm gonna get my pilot's license. I am. Trevor thinks it's a bad idea. My mom didn't like it either. She said a lot of people die on prop planes.
Dane thinks he's gonna be our pilot. Like we're gonna get a plane, and then we're just gonna be like, yeah. Dane,
why do you say that as though that's like impossible?
Wait, hey, Dane gets his pilot license. Are you like, yeah, Dane? Let's have you drive this plane for us versus someone who professionally does this.
What do you mean?
Who would you?
Your Keyman insurance won't allow you to do that, Dane.
That's probably true.
Okay.
We don't have that yet. Alex, write me a policy.
I need help from Alex.
All right. I only have one other thing to say. Funny story about Gabe, since I wanted to talk about Gabe because he'll be the only one listening at this point.
That's probably true.
Love you, Gabe. So every time I meet someone, they think Gabe has just been rich his whole life, which is
hilarious.
It's hilarious every time because he shares it on the podcast all the time. How he lost all his money, how he started and whatnot. And there will be people who listen to the podcast and are like, wait, he hasn't always just had money?
Yeah.
And I'm like, no, Gabe used to be really poor. That's why he's really cool. He's been on both ends of the spectrum very hard.
So immaterialistic too. Like he has so much stuff, but just he doesn't care about it. Like not in a bad way.
I think that's why.
It's just it's not where his joy comes from. He has fun with stuff, but like that's the best part of it. He wasn't born into it. He just created it in like 5 years because he worked really, really hard. Well, 10 years.
It's because we make decisions based off our eyes. Our eyes are the least important sense we have, or least valuable sense we have, probably.
What's the most valuable? Your smell?
Probably hearing.
All right, let's turn.
I think that's a good question. I think that's a really good question.
Most valuable sense?
Yeah.
Who cares?
Probably
this is a real estate podcast.
No, that's good.
Talk about it later.
I'd say it's eyes. If you're asking me.
No, dude, your eyes just trick the shit.
Dude, if somebody was like,
your eyes
you got to
are the
lose
least
one of your
reliable.
senses. Last one I lose is my eyes.
Eyes are the least reliable.
You get rid of your eyes first. You go blind before deaf.
I would get rid of touch.
Yep.
I get rid of touch in a heartbeat. Maybe. I don't know.
But
that seems like it'd be hard.
You got a good point. For day-to-day functioning, eyes are very,
what do you mean?
important.
I'd be running into I run into things and I have eyes.
Yeah.
Anyways,
No, we're not. This is a good discussion.
Yeah, that was people.
Trevor wants to end it.
People love
Just
it.
end it abruptly again.
Yeah. All right. See you. No.
Bye.
Wait. Should we shout anybody out? Do we need to do that anymore? Gabe always shouts somebody.
Shout out to Gabe.
Shout out to Gabe,
It doesn't
our
matter.
fearless leader.
It doesn't matter. Shut it down.
You think anybody's listening?
No.
All right.
All right, see you guys
Hey,
later.
we'll see you guys next time. Thanks for listening. We appreciate your ears.